What does it take to manage nearly 7.5 million square feet of commercial real estate? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Unified Commercial Property Management, based in Scottsdale, Arizona, has made significant strides in expanding its portfolio through strategic acquisitions. According to a recent report by NewsSource, Unified has acquired Main Street Real Estate Advisors, Greater Air Park Realty Services, and the Property Management Division at Menlo Group Commercial Real Estate. This move enhances Unified's ability to provide commercial property management services across the Phoenix metropolitan area. Cody Miller, the operating partner at Unified Commercial Property Management, expressed excitement about integrating these respected firms into their operations. Miller mentioned that the team is committed to building a unified system that delivers maximum results. Unified was founded in 2024 by Miller alongside Matt Barber, Grafton Milne, and Tanner Milne, all of whom have strong backgrounds in entrepreneurship and commercial real estate. Main Street Real Estate Advisors has been offering commercial management services to Arizona's institutional property owners since 2004, while Greater Air Park Realty Services has supported property owners and associations in the Scottsdale Air Park area since 2010. Menlo Group, a well-known Phoenix area commercial real estate firm, began offering property management services in 2020. With these acquisitions, Unified now manages a vast array of retail, office, and industrial real estate, in addition to multiple commercial property associations throughout the Phoenix metropolitan area. Notable properties in Unified's expanded portfolio include Scottsdale Waterfront, Shops, our Gainey Village, Lincoln Village Shops, P83, Palm Valley Pavilion, Verrado Main Street, and Sunrise Market. Unified aims to elevate the experience of existing tenants and property owners through its proven processes, cutting-edge technology, real-time reporting, pre-negotiated vendor network, and monthly training for its employees. To accommodate its growing team, Unified has recently leased a new office space in Scottsdale, Arizona. Their current team consists of property managers, assistant property managers, accountants, and building engineers, all ready to manage significantly more properties than they currently oversee. The owners at Unified are also on the lookout for additional property management companies that deliver quality service across the Phoenix Valley and beyond. Tanner Milne, one of the owners, stated that this expansion marks an important milestone for Unified, enhancing their ability to deliver comprehensive property management services while positioning them for continued growth in the Valley and future expansion into other West Coast markets. Crow Holdings, a leading national real estate investment and development firm, announced the recapitalization of a 194-property, 4.5 million square foot national retail portfolio across 30 states. Facilitated by Crow Holdings Capital, the firm's investment management business, this transaction introduces a new investment partner, enhancing opportunities in the small format and convenience-oriented sector in high-growth United States markets. Michael Levy, Chief Executive Officer of Crow Holdings, expressed enthusiasm about expanding the partnership, viewing it as a crucial step in scaling their business into a leading small-format food and service platform in the United States. Levy highlighted the unique opportunity to invest with a top-tier operator in a large-scale portfolio well-positioned for further growth. Since 2023, when the platform was valued at over 1.8 billion United States dollars, the joint venture has acquired more than 220 million United States dollars in additional assets. This demonstrates significant growth in markets driven by domestic migration, limited supply, and shifting consumer behaviors. The portfolio, currently 93% leased, has shown resilience to disruption, with a 41% revenue increase since 2020. Sterling Hillman, Senior Managing Director in the Food and Service Retail Group of Crow Holdings Capital, noted that necessity-based retail holds some of the strongest real estate fundamentals and tenant pools in the market. Hillman emphasized the favorable supply and demand conditions, with occupancy gains and vacancies at historic lows, reinforcing the firm's confidence in unlocking value and identifying opportunities. The portfolio's assets span growth-oriented markets in the Southeast, Southwest, West, Midwest, and Northeast, comprising approximately 2,000 tenant suites with an average size of about 2,250 square feet. Crow Holdings continues to leverage its extensive market expertise and institutional relationships to pursue opportunities aligned with long-term value creation. Ingka Investments, the investment arm of Ingka Group, which owns the majority of IKEA stores worldwide, has recently announced its plans to bring a second IKEA location to Manhattan, New York. The company has made a new investment in the borough's Soho neighborhood, following its acquisition of 575th Avenue last year. Ingka Investments has reportedly acquired Wharton Properties 529 Broadway, currently home to Nike's flagship store. Ingka reportedly paid $213 million United States dollars for the 2016 building and plans to transform the property into a mixed-use building with retail and office space. This marks Ingka Investments' fourth acquisition of prime commercial real estate to support IKEA's growth in the world's leading cities, as stated by Peter van der Poel, managing director of Ingka Investments. Through property ownership, the company aims to secure IKEA's presence at the most important retail hubs while maintaining affordability at the core. This new location in New York City allows IKEA to continue offering inspiring and accessible home furnishing solutions to everyone, regardless of their budget. Located at the intersection of Broadway and Spring Street, the property incorporates more than 44,000 square feet of Manhattan retail space across 6 stories. As one of the few recently constructed properties in the heart of Soho, one of New York City's top retail destinations with over 12 million visitors annually, 529 Broadway was designed to offer a modern retail experience while blending well with the historic character of the neighborhood. The recent acquisition aligns with the company's efforts to expand IKEA's presence in the United States through new store formats. It also builds on Ingka Group's more than $2.2 billion United States dollars growth strategy to meet customers where they are and maximize fulfillment in the United States. The IKEA store will be located on the first and second floors of the building, spanning a total of 25,000 square feet, with the lower floors used for storage and other back-office facilities. Contrary to ongoing trends of converting office space to other purposes, Ingka will renovate the 4 upper floors for office use. Javier Quiñones, Chief Executive Officer and Chief Sustainability Officer with IKEA United States, mentioned that they are boldly reimagining how they reach and serve their customers. This new store in the heart of New York City is another step for IKEA to be closer to the many. As they celebrate 40 years in the United States, this investment on one of New York's busiest retail corners underscores their commitment to accessibility and meeting customers where they are. Other recent IKEA store openings in the United States include new locations in McAllen Farr and San Marcos, Texas, Hunt Valley, Maryland, Cherry Hill, New Jersey, and Beaverton, Oregon. The Detroit Economic Growth Corporation has announced plans for a new retail development in Southwest Detroit. The project will transform a 6.1-acre site at 6,370 West Verner Highway into retail spaces, potentially including a strip center and outlot development. This site was previously a Department of Public Works maintenance facility. 3 local firms have been selected for the development: Queen Lillian Development, Tecton Development, and Lormax Stern Development Company. These firms are tasked with creating spaces that could host both local and national tenants, restaurants, and possibly a grocery store. The development aims to reflect the pride and culture of Southwest Detroit, according to Jason Jones, principal of Tecton. The Detroit City Council will need to approve a development agreement for the site, as well as the sale. The city is currently handling the remediation of the property, which is generally bounded by railroad tracks and Livernois Avenue. Construction is expected to begin in fall 2026, with completion targeted for spring 2028. The project is expected to seek incentives such as brownfield tax increment financing. Both Christopher Jackson and Jason Jones have been active in multifamily development in Detroit in recent years, with separate projects along Woodward Avenue and Trumbull Avenue in the Woodbridge neighborhood. Additionally, Lormax Stern has collaborated with Dennis Archer Jr.'s Detroit-based 1642 Ventures to secure retail tenants, further enhancing the potential for this development. Let's turn our attention to some exciting developments in Orlando, Florida. A new apartment complex with commercial space is coming to the city, thanks to a project by a collaborative team of developers. This new development aims to meet the growing demand for mixed-use spaces in the area. According to a detailed report by Jonathan Grass, the project will be situated on a 10-acre parcel of land located at the intersection of Central Boulevard and Rosalind Avenue, right in the heart of downtown Orlando. The development will feature a combination of residential units and commercial spaces designed to create a vibrant, integrated community. The residential component will comprise 300 apartment units, with a mix of studio, one-bedroom, and two-bedroom options. The developers plan to incorporate modern amenities and design elements to appeal to a broad range of residents, from young professionals to families looking for urban living. On the commercial side, the development will offer approximately 50,000 square feet of retail and office space. This includes ground-floor retail units, which are expected to attract restaurants, cafes, and boutique shops, enhancing the local dining and shopping experience. The developers are committed to creating a sustainable and environmentally friendly community. The project will incorporate green building practices, energy-efficient systems, and landscaped public spaces, contributing to Orlando's efforts to promote sustainable urban development. Construction is set to begin in early 2026, with a projected completion date in late 2028. This timeline reflects the developer's dedication to delivering a high-quality, thoughtfully designed community that aligns with Orlando's urban growth strategies. As Orlando continues to experience population growth and urbanization, projects like this apartment complex with commercial space play a crucial role in accommodating new residents while enhancing the city's commercial landscape. This development is poised to become a cornerstone of downtown Orlando's ongoing transformation. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.